What's up, everyone? Welcome to another video. This one is going to be about the dollar index. The dollar has been on a massive rally following support and resistance beautifully. Started basically when the Fed just mentioned about increasing interest rates, tightening quantitatively, and then when he actually started tightening, this thing really rocketed up. And it's, like I said, it's following these support and resistances almost perfectly. So let's see where this thing's going to go. Let's zoom in. Now here we are zoomed in on the daily candles. You could see how the dollar index rejected resistance almost perfectly like it had in the past here. This downtrend came with a drop in yields as we had some economic data pointing out to slower growth, which is good for inflation, and investors were assuming that maybe the Fed might not increase interest rates as much, but we have not reached the interest rate target of 4.6% like the Federal Reserve had mentioned in their forecast. So theoretically, you would think that this rally is going to continue as the Fed has mentioned they're still going to increase interest rates. So if you are bullish on the dollar, then you want to watch support levels from previous highs. This will be around the 110 area, maybe 110.50. And also these dynamic support zones here, these upward trending supports, you might catch bounces at any of these levels, just like we had done in the past. As you can see here, I'm highlighting. So watch for the bounces to come anywhere in these areas here if you're still bullish on this rally. And it's a strong rally. You don't want to fight the trend. But the most important and much more interesting aspect of the dollar index right now is this previous consolidation zone here. This is a very long-term chart with monthly candles. This is way back maybe in the year 2000. And right now the price of the dollar index is reaching this historically high area here, and this is considered a long-term resistance zone, so we might find some resistance here. The dollar index might start getting choppy up in here. It could completely reject it, or man, if the Fed keeps hiking rates like crazy, we could break through it. But the Fed did give its forecasted 4.6% target. That is something to provide some sort of certainty. Right now, the rates are just around 4%, more or less, so we do have a little more upside, and that could give more upside to the dollar, but not much more based off the Fed's forecast. So this previous resistance zone here could be a very strong level to watch. This could be the end of the dollar rally, but I should mention, I wish I had more data to show you. Dollar has been on a very long-term, multi-decade long downtrend. So basically, if the price does get above this consolidation zone, that will end the long-term downtrend, and the market, well, the dollar index will basically be trading flat for the past, well, since 1993 or so, we could say. So this is a very interesting level to watch for the dollar index. The more long-term the support or resistance level is, the stronger it is, so keep eyes on this zone here. And this zone rests between 113 to around 118. So this is the strong resistance zone that we're going to be in here. Now, if economic growth skyrockets, then people are going to think the Fed's going to tighten rates even harder, so we'll see the dollar skyrocket if we get economic data pertaining to economic growth and it shows strong growth. Or if we get strong jobs data, then people are going to think the Fed's going to tighten hard. You'll see the dollar jump, yields will jump as well. And vice versa, if we get economic data releases showing that growth is slowing, job numbers are coming down, all that jazz, then the Fed might not have to hike interest rates so much. That's what investors will think, and we'll see the dollar come down, and then we'll see equities come up in that case. That's basically how the market has been acting. It's been very sensitive to economic data. So pay attention to that stuff when you're following the dollar index and the equity markets. And always remember, when the dollar's going down, then the market is going up. So keep eyes on the dollar index always. And that's all I got for this short video. If you like what you heard, hit the like, comment, subscribe, notification bell, all that good stuff, and I'll see you on the next video.